Yo, what is up, guys? First of all, let me just say before we get into it, profits are not promised in trading, results are not guaranteed. This is not me giving any personalized financial advice, and trading includes substantial financial risk, and this is not encouraged. Right, with that out of the way, basically, I just want to talk about, like I said, price action and market structure. To clarify, obviously, this is only simple for those that have practiced and quite honestly suffered enough to realize what to look for and just know how many different types of things to avoid. It's basically complexity made simple, right? So, if you stick with me, like I say, I'm not giving you anything in particular. I'm just kind of going over some things I found, and then you can backtest this and look yourself. And as I go along multiple videos, you'll see what kind of things I'm talking about, and then maybe you can get an idea yourself and have a look on your own charts. So the way I basically look at the market and trade is by obviously looking at supply, demand, major support and resistance, and then breaks and closes. But I think the best way to show is by pretty much just getting into it and just seeing what I see and being able to talk about it as I go along, and you'll eventually pick it up, because it's hard to even figure out where to start. I'm assuming this is for people who obviously practically have a bit of experience. They know the terms, know all the basics. I'll be honest, this is not a full course for all that kind of thing, so it will not be that. I just want to show you some stuff. So basically, a lot of the times when the market is moving, obviously you all know we have trends, down trends, reversals, up trends, right? A lot of the times when a market is going to reverse, a lot of the times it has come into contact with some form of significant level that's caused price to turn around there. It goes across multiple time frames, so there's just so much things going on in the background from what you don't see, and every single pip and tick basically is calculated and has a purpose for something, and it's just basically your way of navigating around all that kind of stuff. So basically what I'm going to do in this video, we'll just start off with an example of what I trade, what I like to look for, and then I'm going to show you a prime example, and then I'm just going to go into the market and go in basically blind, because I don't always like, it's good to have an example, but I don't always like seeing, people being in, the chart replay, back testing, bar replay. It's good to be in there, but, obviously people are playing it out as if they're not knowing what's going to happen. They put their strategy on there, and then it works out perfectly, which is obviously not always the case. So I want to be able to capture knowing what to look for, and then seeing things not play out, because obviously when you're in trading, it's impossible for things to go right the whole time, and there's constant ways and different types of ways to look at the market and navigate around what's happening if you truly do want to become profitable and consistent. Strategies, there's a million strategies out there. Most of the average good ones do work, but it's not necessarily the strategy that makes people successful. It's all about the mindset behind it. The mindset is something every single person is going to have to work on every single day, because you're a human being and you are subject to different kinds of emotion, fear of missing out, greed, etc. You know the score. You've probably heard it all a million times, but we always have to basically work around that and not fall victim to that every time we trade. But obviously that's what trading rules are for. Obviously not everybody sticks to trading rules, but we have these rules and follow them as much as we humanely can in order to try and keep ourselves alive in this game, right? So I'll try and stop yapping so much. So I do need to cover that stuff just so I don't get straight into it without you knowing what's completely happening. So what I'm basically going to be covering here is this 4-hour downtrend, this reversal here, and going up. Basically, whenever we're doing this kind of thing, it's not to capture all. It all depends on your strategy, what you're actually trying to do. Me personally, I do look at the daily sometimes, but sometimes the candles are just so big, there's so much going on, I can't really see what's going on until I drop a bit lower. I do sometimes go from 1 hour down to 5/1, but more recently I've realized starting from 4 down to 5 often is the same setup with where the 1 hour is. So basically what I look at here, what I'm looking at is obviously lower highs and lower lows, to the point where price had this lower low, lower high, lower low, and then price reversed here. So basically the example is covering what's going on within this movement right here. So, you know, when I said price reacts to a certain level and then reverses or does whatever, no, that's what we look at. This level here, when price was all around this movement, what am I trying to say? We had all these, it's all about breaks below in continuations, and basically removing any barriers to price that's going to maybe potentially stop it from moving in a certain direction. Okay, so just keep up with me, yeah, and then just repeat the video. Sorry, go back a few seconds anytime you want to understand something a bit better, or just I'll go into loads more detail about everything. There's just so much to talk about. I can't possibly just go into it now, but I'll just keep on touching stuff as we go into keep on touching on stuff as we go into later videos and stuff like that. So basically, when I've been observing the market through all this movement, but obviously this is where we are, yeah. So when price was in this major downtrend, looking at these breaks below these levels, touches back into supports, back up, retracing, drops, belows, retracing, drops, belows, retracing, same all the way down here, right? There's multiple, what we normally look at is different levels where price could stop, potentially react at. So if you notice below this level here, when price broke this support, there was pretty much not much obstacle, because it's all just pretty much clean candles until we get to this. Yeah, blue candle. Obviously not all brokers would look the same. This could potentially look like a different color, but the fact that we had a pause here and then a continuation and then this reversal here, and then this is basically a lower low, lower high break. There's a million different things people can call this. If you want to look at this as a higher time frame order block, 4 hour order block, supply zone, bearish support, bearish resistance, man, words are everywhere. But basically this is a significant zone. Obviously any zone that hasn't been touched yet, you know, it's funny, obviously they all do matter, but you know, when people talk about obviously a zone that has been touched many times, bro, I can't, that word, I'm so childish. A zone that has multiple touches basically becomes more significant, but it also sometimes means the more it has been reacted to, sometimes it can potentially become less reliable if you was to try and use that zone again as a place of reversal or to take a trading opportunity from. So keep these in mind, and there's always extra steps that you take in order to protect yourself and just get the highest quality setups possible. So with that in mind, yeah, we have this zone here, this resistance level, right? There's also this level as well as these two levels here where price could potentially stop and react to. Obviously, we look to see if it reacts. Sometimes price just blasts right through like we see there, but we're always observing and reacting, not predicting, basically, to what the market gives us, and we go from there. So, say I'm looking, right? Say if I was in some kind of sells, and I'll be looking for places to potentially take profit or just to be aware of in case price wants to reverse against me. You would have these zones marked out, but as we can see, this zone only got to, this price only got to this one before turning around. Yeah, so I'm not going to focus on these two because there's nothing to focus on, because obviously price never got there. So I would just say we would observe about what the behavior that kind of happens around here. And sometimes when price is so far away like this, I feel obviously quite risky taking more immediate action because it's so far away. But it does pay to observe and see what happens in the market, because this was a 4-hour zone, usually when price comes to these levels, I'm trying to basically observe, because we have continuations, reversals, and consolidations, right? There are continuations within larger time frame consolidations, and there are reversals within continuation, higher time frame continuations, right? This level here is was just a lower high, but in the lower time frame, this will be some consolidation right here. This will be an uptrend in a small time frame, and this will be a reversal within a higher time frame downtrend. But yeah, I'll say a lot of stuff to try to keep up with me. If you are somewhat versed in Forex or trading, etc., you'll kind of know the terms I use. So, a lot of the things, say if it's a 4-hour and it goes into a 4-hour zone, I would kind of look to drop down a time frame to see some form of maybe structure reversal. So within that 4-hour zone we had over here, it tagged into the 1-hour here, and we have structure formed and consolidation made as well. Obviously price is moving around here. Usually when, say if you was to look for price to break and close above, to properly reverse at that zone, obviously you wouldn't just look for entries, you would look for a break of structure, so that the current time frame trend will reverse and turn into something else within the higher time frame macro structure. I don't even know if that makes sense, but that's what I'm trying to say. Just stay with me and then you'll get me. Okay, obviously when you're in lifetime, don't get me wrong, time frame matters, and session of course. For now, I'm just focusing on the actual structure of what I would like to see, and then you would apply that same structure within the different sessions. Also looking at ADR. There's so many different things that you got to keep in mind, and then it becomes simple when you know what to obviously include. But if you are looking live, you would always want to be looking back and forth between time frames, just so you can see what kind of behavior and structure is going on. So say if I was to go into a 4-hour zone and look for a 1-hour structure break, I would usually look for a close and a break and close above this level where the wicks went through and didn't close. Usually these wicks would also equal lower time frame support and resistance. So you do have to keep these in mind, but also higher time frame is always taking priority over the lower time frames. So although there's structure there on the 15-minute, the 1-hour, they are to just wick throughs, basically showing as fake outs potentially. So if I was to go here, right now we can see price is still not closed around there. So usually, yeah, price is still consolidating. And then because we're going back and forth between time frames, you can now see that price has formed a structure on the 4-hour. So rather than now looking for this 1-hour structure to be broken, I would be prioritizing this 4-hour structure to be broken, because this is a higher time frame. And now, as we saw on the 15 and 1 hour, if the 1 hour was to close above here, but the 4-hour didn't, there's always a potential for the 1 hour to look like this on the 4-hour and just close back in within the zone. There's less conviction if the 4-hour hasn't, if there's less conviction if the 4-hour hasn't closed, but the 1 hour has. So within this structure, I would be looking for a 4-hour candle to close above this close here. Obviously, there's different ways people can do it, right? If you want a significant break or significant close above all the wicks and stuff, but if you notice when you're on higher time frames, there's so much micro structure going on within these candles, and a lot of the times the price action is played out before you even get there. So if you're looking at this structure as well, we're still in this 4-hour zone that was here. So I would not be looking too much to look for sells. If I was, I would be looking for confirmation that price is not going to react here and is further decided to break further down, if that makes sense. So although we have this structure here, 4-hour structure, and the 4-hour strongly closed below this level, say if I was going to look for some sort of continuation down, 4 hours closed below the level, I know this 4-hour zone is here. I would drop down to see if there's any other 1 hour structure. Right, so what's that? The 10 o'clock candle. I want to show this close. So that opens at 2 o'clock, right? So let's catch up to where this market was. Yeah, this is basically where that 4-hour candle is right now. Yeah, it looks like that. And this is how it looked on the 1 hour. So if I was to look for a price to continue down here, obviously we're still in this zone, but on the 4-hour, I would basically look for potential breaks / retests and more structure breaks lower on a lower time frame. Obviously the 4-hour has closed below that level that was all the way over here. Look, it's below this level slightly, meaning usually you want to see clean wick rejections from a certain level, but again, it's all about different time frame analysis, and you would be looking, like obviously if you looked at the daily, that would obviously be a wick, but on here it's closed below, but we still don't know if that structure is going to continue going lower. So you're always going to look for more structure breaks, and etc. So obviously, as we can see here, this was probably a news day. That's 1 o'clock as well. You always want to could it even been CPI? I don't know. Maybe not. I know this would have been probably NFP week, considering the date. It's the beginning of the month. Wait, that was this Wednesday actually, so that probably was. No, I don't even. Yeah, damn. My thoughts were everywhere. Stick with me and we'll go into it. But yeah, that's closed back into the range. So now, basically, when price gets like this, you see how we have this structure below that zone? We have that structure below that zone, and we have this structure above this zone. So now, price has closed a little bit below here. To get further confirmation if price was going to go lower, I would basically want to see a 4-hour close below this level, or a 4-hour close above this level to go up. And then one thing we're always looking for, remember when I was talking about barriers, you can see from here to here, we have this amount of clean movement where there's less barrier and less obstructions to get in the way. Before, like obviously, don't get me wrong, price might just continue past this, but if you want to be secure and more safe and obviously responsible, you've got to look at this movement here and think, okay, there's less obstruction here. I can feel a little bit more comfortable if I was to take a trade and see if I can take it to this level. So going back over here, what I like to do to not get caught up in all this noise and not actually knowing what the market's going to do. Don't get me wrong, there's a few wicks here, which basically on the lower level, we can see this level of resistance / demand, supply, these wicks here. This zone here obviously has been reacted to before it went down. So if this was to come here again, I wouldn't be so as worried about this being the reversal as much as I would this supply zone here. Obviously, I know there's multiple different ways that people draw different zones. If you want, you can say that's not supply zone, that's just a resistance. Then that's the way I do it. I like to draw it like that with candle bodies and closes. Some people draw demand like that. Sorry, supply / demand, or they just do the whole last candle before I move. I like to do it like that. And if you don't want to call it supply, then don't call it that. So these two zones, yeah, I would now look at this, wait for a candle to close above this, and to keep yourself safe and out of the noise, I would just call that no trade zone. So I would wait for a candle to either close below this or below that, or above that, and then that's what we'll be looking for. So when we look here, so now, don't get me wrong, the timing is different. I believe it starts to, if you look after this, it will be 10 p.m. The market would close and it would go into Asian session. But I'm just showing the structure of what we're looking for. It's not all the most amazing, significant close above, but usually you'll notice a lot of times they do mean, they do have significance, even if it is a small close above or below a zone. So because this 4-hour closed above this zone, I would then be looking for structure to be moved on, structure to be tagged into on a lower time frame. So sometimes, even though it's closed above, on the lower time frame, you may see, on the current time frame on this 4-hour, you may see a wick go below here and then price continue. Usually when that's happening on a lower time frame, there may become some kind of structure that is in place there that price reacts to. So you can see price broke, same way I'm talking about now. On the 1 hour, price broke above this zone here, this little wick down, and then pushed up. Obviously, this is not the one we're focusing on, but you can see on the 15 minute, closed above, broke down, we saw more structure here, tagged into here. If you go to the 5 minute, we see it break down again. Obviously, I don't usually go to the 1 minute, but you can see there's always different kinds of structure breaks and market reversals going on in higher time frame. But anyway, sorry, to get back at the topic at hand. 4 hours closed. We're looking for a retest around this zone or any other zones that might be there. Okay, so the 4 hour is closed. We have this here, this zone, and basically I will be looking for some kind of retracement. So on the 1 hour, you can see this candle is going down into this zone. On the 15 minute, basically I'm looking for structure breaks. So we've had the 4 hour close above, but we need more confirmation, like a reversal to confirm, or at least give us more confidence that price is going out above direction. So it closed above, tagged into this level. So now we'll be looking for some kind of structure break above here. So say there's another support structure here, a break above that could be a potential reversal, and then this could be an extra conviction. Basically, this is what I was saying, where there's always something extra you could do to get out extra confirmation that the market is going to go your intended direction. So usually if we're looking for the 15 minute, we would look for a close above this level, and a reaction from this level, or at least a 5 minute, another structure to look for. I struggle to find my words. Okay, so tagged into that 1 hour level. This is, I don't want to go into the 4 hour because it'll skip time so much. So we had the 4 hour close. The 1 hour showed this wick down to this level. The 15 minute is showing this structure here. Sorry, this reaction here. This structure being broke above here, and this structure being broke as well. So we have two 15 minute zones, and then usually what you're kind of looking for is some kind of reaction, or either from the 15 minute, but usually if you're looking at structure breaks on the same time frame, it might not always give you the best risk to reward entry if you do see a reaction on that. So sometimes it's good to go a time frame below and look for another structure change in that can give you a more refined entry. So here we're on the 5 minute, we can see waiting for price to come into one of these zones, because sometimes it might come there, sometimes it may retrace deeper and tag that, or even that one there, because there's always different zones of levels that price could react to. Okay, obviously if price just continues to go, that means you don't have a trade anyway. If price comes here and just continues to break below, we didn't get confirmation. Obviously trading, it's never going to go right 100% of the time. You might get the perfect entry, you enter it, and price just goes against you anyway. That's basically what I want to kind of include to be transparent. Right? Okay. So, on the 5 minute, yeah, I will be looking for a clean, reaction from here with wicks and stuff. So we have this zone on the 5 minute. You can see the red candle closed here, and the bullish candle just closed like that. To me, I can tell it looks like a somewhat reaction, but honestly, it doesn't look so clean. It doesn't give me that much confidence. So that's why you got to be looking at different keeping the both time frames together. And you can see here on the 15 minute, it's a very, very clean. It's a very clean bullish hammer candle, if you want to call it. Is that what we call it? Bullish hammer candle. Very clean wick into this zone. Wick rejection. Strong move away. So basically, we had the 4 hour close, the 1 hour / 15 minute tagging into this, the 15 minute structure break above this level, and then the 5 minute / 15 minute came here, closed there. So say if you was to go off the 15 minute entry, right? Obviously, you would be doing there. It's up to you where you want to put your stop loss and all this. But me, usually, I've noticed a lot of the times you may enter and price sometimes wants to retag that level that you entered before reversing, and sometimes it can take you out the trade and just go without you, which is very upsetting, but very not always unavoidable. So I just want to give you a bit more detail about what I'm talking about, because there's just so much to go into. Like, this video's already been going for 24 minutes. And to be honest, it could go on for ages. So I'm just gonna have to keep on splitting up into different videos so you can get the gist of what I'm always trying to repeat and talk about. So if the entry was here, stop loss, obviously it's not safe to do that. To be honest, you want to put it as far away as possible you can without ruining your risk to reward ratio. So here, because there's always a potential for price to maybe, it's rejected this level, so we want to have confidence that this is where price wants to make its intended move. But there's always a time where you might see the signal, price will come down, maybe test this area before going as well. And if you had your stop loss here, it could tag you out and then move without you. So you could also maybe be safe and put your stop loss down here. Say if it does if price does come to retest here and go, you're safe. But to be honest, this is another battle that you have to basically come to grips with and find a way that feels comfortable with you. If you put your stop loss here, are you comfortable knowing that it might not do? The price is giving us a signal, so it might not come back here and tag you out, but it's up to you where you want to do it. You got to kind of manage your risk to reward ratio. But obviously, one thing we've got to look out for as well. So say if I was doing this here, if price is giving that signal, in this instance, I'm gonna, let's just say, if price comes to tag this level again, I at least want to have my stop loss low enough that if it comes down here, maybe hopefully it doesn't come below this wick and just tags this zone. So there, at least I'm safe somewhat. And then obviously when you're entering levels, you always want to be looking, where are my potential take profits, or what is my exit strategy, or what are the potential barriers that are in the way that could potentially stop price moving in my direction. So right here on the 15-minute, you've got all these highs here. This high that hasn't been broken into properly yet. I mean, it did get wicked into here before price did that, so it did technically, in my opinion, make that somewhat weaker and not have to worry about it. Also, when you was on the 1 hour, these are all wicks. This is a close above. So if you're looking at the market, you would kind of be hoping and intending for the market to be pushing up. Okay. So we had that zone on the 1 hour before, right? This supply zone resistance where price could potentially stop. It doesn't mean that you have to have your take profit there, because say if we were looking at the 4 hour, candle break above, these candles are all red. There's wicks. This has been wicked on. We have another 4 hour supply zone here. Basically, you put your take profit at a sensible level, right? So 1.85 to me, obviously, that ratio isn't very sustainable. 3 is good. Even 3 is good if you wanted to take that wick, because that's where the 4 hour zone resistance zone was. I mean, 1 to 4, that's great. I feel like even 2 to 2.5 is 2 to 3, 2.5, 3 is great. 4, that's fantastic. But yeah, so say you entered, where are we? Right, so say if you entered there, basically when price, obviously you've always got to be wondering when do you protect this trade, right? Because once you enter, then it's about management. There's a potential resistance level here that could stop me, and then there's this level where price could also stop. So usually, I'm not gonna go into this stuff, but let's see what some options are, right? You want price to go to a significant level so that if you move your stop loss, price is not going to come back and take you out, because price may move, right, come back and take you out, and still continue. So you want to be smart about your stop losses, but price is not always doing the same thing. It's not always behaving the same way, so you have to be really smart about that too. So price, so let's see, right, price, there's a 1-to-1. If price gets there, yeah, okay, there's that 15-minute zone. I was supposed to delete that, but yeah. So let me just show you something, right? That's the 15-minute entry there, right? You remember when I was saying, because that was this is cleaner, right? It's a wick. But on the 5-minute, we get this. Sometimes if I also wanted to refine it even further, there's a 5-minute tag into that zone. There's a 5-minute break and close above here as well. Even at that point, you may even decide to drop down to the 1 minute if you're brave enough. and see if there's any kind of reaction from there. Right? Obviously, again, it doesn't look so clean. You may even, you know what I mean? There's just loads of stuff you can do. There's another 1 hour close, break and close above. It depends what you want to do though. It depends if you consider that a significant enough reaction to get into. Okay, fucker. That one I would. It looks like a big move, but if you look at the pip moment, it's only like 2 pips there. So say if you was to enter that and put even your stop loss way below here, look at it compared to the entry you had before. The stop loss is way smaller. It's all the way down here, away from this demand zone and support. And say if you was to put your stop loss in the same area, now even to the first one, we've got like just under a 3 ratio. If we was going to go to the second one, that's 6.7 risk to reward ratio. There's always a chance price might just come back here and take you out after you've moved the stop. But because we can always be like wishful thinking, blah, blah, blah. That's what I did in hindsight. I'm not going to use this 5-minute zone. I'm not going to use the better, cleaner zone entry. So even here on the 5-minute, we had this close above. And we had this complete great. There's no candle in this at all. It's pure wick. This, if that was a little bit blue, I would also consider that an entry. But sometimes I get a bit worried when there's no candelage, whatever candelage. So that bit there, this bit more, this and this would have been confirmation for me to be comfortable to enter that. But I'm just going to stick with a 15-minute for now. I'd rather go with the least profitable, easier, safer option than try and claim, oh yeah, you could have had this massive risk to reward ratio. So if we're looking at this now, yeah, we're looking at our potential zones where price could potentially reverse, and then we want to make sure we be smart about this, right? Because there's always times where price may go in your favor for a little bit and then just completely reverse, even though there doesn't seem to be a reason why it should have reversed. Who knows, man? There's not a single person on this earth who gets 100%. Even if you follow your strategy to the fullest, have the highest quality entry, doesn't mean it's going to go in your favor. So you've got to be smart about this. So as price is moving, we have our first obstacle here. Obviously, we have the resistance, but even the wicks and these levels could always potentially get reacted to. So right here, right to this level, 1.87. Maybe after you see this, let's say there's a 1-to-1 level, right? After we see this rejection from here and then push up, because it's rejected now and then moved up, maybe it would give us a bit more comfortability to move our stop loss down here, with the assumption that price might not come back down to here because it's already retested this level and continued, right? And if this is going to be an uptrend, we would assume continuous high highs and high lows would be forming and price shouldn't come back to here. So say if our stop loss is protected now at this level, which is a 1-to-1, price has come to our first hurdle right here. This is the 1 hour zone, and then we have like another minor 15-minute zone within that zone. Price has come to here, rejected it, so our stop is protected. To be honest, mate, if you look here at this point, price goes to a 2-to-1 ratio. I believe, and this is just the way I do it, obviously I don't know about other people, that's just me. I believe taking some profit off here is the smart way to do this kind of thing. I like to take profit off when it gets to 2. So say there's a million different ways. This is all about trade management. It's a whole another category in itself, because if you I'm trying to say what am I trying to say? Yeah, there's a chance price might go to 2R, yeah, and then just reverse and take you out. So you protected your stop, yeah, price gives you a 2 ratio and then takes you out. Sometimes and then your price might go 2R and then you close maybe half or 60% of the position, and price decides to not go back and basically go even further, and you're like, oh man, if I didn't close my position, I could have capitalized on all that movement. But I feel like this is not a very smart and logical way to be approaching the market, because you never know what's going to happen. I feel like just closing off as price moves bit by bit, and then obviously having other measures in place if you want to see if you can get loads of movement would also be another way if you want to approach it. I feel like, in my opinion, what I like to do, smartest ways maybe take 50% or 60% off at 2R. At least that way, whatever you would have lost if the trades was going to go against you, you've basically made that back. One, it's a free trade anyway, but if you close some off at 2R, 50 or 60%, whatever you would have lost, basically you've made that and you've covered. If you do 60%, that's a little bit more than what you would have lost. So sometimes you may even close some off and not be worried about the trade because you've already made profit more than you would have if you had lost. And then, well, voice crack. And then if you wanted to take price to where your initial, that 4-hour resistance was, that's a 4R. If you want to close the rest of the position there, me personally, sometimes I'm saying there's different ways, depends how I feel. Say if I closed 50 to 60% off here at 2R, if price is going to go to 3R, okay, sometimes I might, if it goes very close to it, I might do it. Let's see. Don't get me wrong, this is an example I know that plays out, so I don't like doing this, but I'm showing you a prime example. Obviously, at this point, most times the trade would be around London or New York session, but if you notice, man, look at this. This is Asian session, and price is still making very clean movement above, because it broke above all this noise right here. And then you always want to make sure you look at the ADR, make sure the ADR is not fully extended if you want to give yourself a bit more comfortability. Basically, I don't look at any indicators pretty much. This indicator here is just to show me the session times. And then I've got the fair value gap thing here, which I don't really use because it paints it all over the place. But anyway, so yeah, price goes to 3R. Maybe I'll take 70% off. So basically, I've closed 50 to 60% off, I will close another 10 to 15% at 3R. And then at 4R, maybe I'll close another 10 to 15% off. Okay, maybe, so price is rejecting here. This is above that 1 hour zone, by the way. So price, even here, just look at stuff. Price is closed above this 1 hour zone. On the 15-minute, it's come tagged. We've got a bit of structure here. There's a 15-minute zone there as well. So if we're looking at continuations, we may look for a break and close above this level and then retest it from it. Or if you want to look at maybe some 5-minute structure, I don't see any highs structure to break above here. So, okay, now there is. See, there's little bits of structure here. So, sorry, I'm getting a bit off track, but so we have this 1 hour close above here, drop to a lower time frame. You can see this structure. If price closes above this, that would be another potential confirmation for price to continue going up. Now, this 15-minute zone, 15-minute structure into a 15-minute zone usually equals me going to the time frame below and seeing if there's any structure in between that. So we had this, whatever this is, this level here. Price is wicking around it. Form structure. Price closes above, breaks and closes above, and closes here and rejects it strongly with this bullish strong wick. There's a whole % chance that this may just completely fail. Let's have a see. It could fail. Yeah, so don't get me wrong, it's not fully failed, but the price moved a bit. It came into this obstacle, which was what? This 15-minute zone here. Like I say, there's always an obstacle, so you want to look at movement. So say if I did enter there, if I was going to enter this, my stop loss would probably be around here at this level. I don't think I don't even, would I have protected my stop loss if you're smart? I mean, nah, that's a lot of movement there, so I don't know. Let's just see. Right, so where did I say my stop loss was? Right here. So if I entered here and my stop loss was here, right? Depending on my spreads, that very well probably could have just taken me out. Yeah, unless you're on some insanely good raw spread. I don't know. Raw ECN account where the spreads are super low. You may have escaped that, but most likely it could have stopped you out. But I'm just saying, like, things are not always playing out perfectly. It's just good to observe stuff. Meaning, you might want to look for a proper close above this level that could have potentially avoided whatever happened here. But there was a close above there, which didn't. The close above here, which didn't necessarily work out. There wasn't that much structure going on. You got to always look at stuff. Not everything works. Not everything fails. Not everything works all the time. Right? And this is not even safe. We're still in this trade here. I'm just kind of trying to show you different kind of things that could happen. But yeah. Anyway, price came here, eventually wicked around a little bit. And then if you're looking at closes and above and you're kind of thinking, what do I trust? Obviously, this closed here, not that significantly, but it wasn't anything much on the 5 minute to do here. There was another structure break here. That was a big ass candle. Another tag into the zone. And then this basically consolidation within a continuation, right? On the 15 minute, price is moving up. Consolidation. On the 5 minute, that just looks like pure consolidation. Until basically, old text, when did I add that? Oh, 40 minutes, man. I'm sorry, this video is very long, but there's just so much to talk about. I'll try and make the future videos shorter when I'm just going into straight examples and not going into so much detail. But I just want to show you stuff and show you observance, things and price behaviors and the way things go. It's very detailed stuff that goes on and people don't always notice it. But yeah, so price again. Price broke above that zone here, but closed back a low. So this, I would say what I would like to do is move the next zone. So we look for closes again. So on here, price closed above this zone. There was also this level. I can't even draw a zone because there's no wicks. So that's there. The price closes above, tags into this. How does that look on the 5 minute? Basically, that looks like this. If I was on the 5 minute, there'd be no opportunity for entry here because it just looks, there's no signal. So we have this structure here. And then both of these two structures here. Which price, what does that look like on the 1 minute? I'm not here, but that, yeah, that tagged into it and moves, but that's too big. I wouldn't even deal with, I wouldn't even bother with that. But anyway, like we saw, I should have just gone straight to it, but I just really want to show you price behavior in detail so you can have a look at some things and just get a good idea for it. But yeah, price eventually goes to this zone, this 4 hour zone. So if you've taken off profit along the way, you wouldn't have made it. You wouldn't have made a full 4 to 1. If you're taking profits along the way, you may have made potentially 3 to 1, 2.75 to 1. I don't know. Depends what you want to do. Depends how you want to scale out. But I always do believe it is smart to scale out. Price doesn't always go straight 4 to 1 to your zone. So potentially you could get price could go 3 to 1 in your favor, and you've protected your stop loss, and then just reverse and hit you out of break even, which I don't feel like is very smart when you could have capitalized on all that movement. So I do feel like it's best to scale out. It's hard to get into the habit of wanting to do that and being secure and comfortable in doing that. But like I say, if you want to be serious in this game, there's just some things you're going to have to do. So basically, so say if you close that now, and maybe you was moving your stop loss up, or say if you've been closing out, you may have made 2.75 and your stop is down here at break even. I don't know if you've closed the whole trade out or if you want to see how far price can go. At this point, I would just recommend taking bits off until you've just got no more trade left, or leave a runner and maybe do a trailing stop after you've taken a bunch of stuff. There's just so many different ways you can manage your trade. You can either choose to have a set different rules or observe the market conditions and act accordingly. But yeah, so price consolidated here. I'm going to take that off now because if it was me, I'd probably be out of this trade at this point. I would have scaled out. But yeah, so yeah, we had that break and close, all this tag, and then price hit this next obstacle. Price continues, it tags above this, continues to move. Again, if you look, we're looking at obstacles, right? A break here, candles are red up until here. Obviously we had this structure, it was tagged, so it's kind of like, maybe price isn't going to consider this an obstacle. But if you look over here, price closes above where that obstacle level is, and then tags into this and goes up again. Like I say, there's always more structures and breaks. Like, look at that. I'm not going to go into that because it's easy for me to say, look at that, price moved. But I'll go into another video. Yeah, I think I'm gonna come to a close here. But basically, the essence of this trade basically was zone there, zone here. We don't do anything until price closes above one of these zones. It closed above there on the lower time frame. It tagged it into this zone, and then again, price broke above this level on the 1 hour, I believe, on the 1 hour and the 15 minute. Another zone here. Price tagged into this zone on the 15 minute, as well as minor structure we saw on the 15 minute, 5 minute into the 15 minute here. Different signals that you could have also got into, and then you basically just manage your trade and look for potential obstacles. If it does go in your favor, protect your stop loss after a certain time, scale some out after it gets to a certain level, especially if it hits a potential obstacle. You want to protect yourself and have secured some profit, and then observe how the market plays out after that until you're either out of the trade or you get stopped out of the trade, but same result. I've talked a lot for 45 minutes, potentially doing yap. I did say made simple, but I promise you, if you stick with me, yeah, I feel like I do have a lot of value to share, and a lot of stuff you can just observe and go into your charts and trade, and just observe and look and see how the market plays out with different candle closures above structures. Watch out for barriers, obstacles, and clean movement, clean conditions. You want to make sure there's not significant news nearby. If there is news coming in, you want to make sure you're maybe out of the trade an hour or so before. If the market want to start chopping up, try not to be in a trade during it, or at least have secured profit and secured your trade if you are going to be in during news. There's a lot to talk about, but I'll save that for another video. So, to be honest, mate, I don't even know how many people will even see this. Yeah, and people might not even be watching at this point. I probably could just be talking to myself, but I'm going to put videos out there because I feel like I have a lot of good stuff for people to see. If there is anybody here, I would ask that you drop a like on the video and subscribe if you want to see some more valuable content. In that case, I'm going to love you and leave you right here. Bye-bye.